The market was quite active. It was more on the bearish side, as most players in the market sold down some of their stocks. What happened was that there was an auction. Of course, you had to fund. System liquidity dropped from 200 billion levels we had last week to 20 billion this week. So as of today, system liquidity is 27 billion as at opening of the market. Yields that were at 13.3, 13.5% also went up a bit. We saw yields at 14.2, 14.3%, or even on midterm securities. What has happened is that at this point of the month, we are seeing the OMO auction took out 111 billion on Monday. There was a $210 million issuance intervention by the central bank on Monday also. Those interventions took out funds, and then illiquidity crept in, and then you had to sell down some of your securities, take some profit, get some liquidity, and then go into the auctions. What we're expecting is that in the next week, when federal allocations come in, that's FARC and others, there will be some reprieve, some relief and some easing. It usually lasts for 9 to 10 days. That takes us into next month. That's April, let's say 1st to 10th, and then it's cyclical. You see this tightness coming again. You can easily predict to buy in and sell into it, actually.
Bankole, how would you describe demand from foreign portfolio investors, perhaps in the last 2 weeks, and how has the yield environment affected their appetite for securities?
The yield environment is still quite high and attractive. We're still at double figures, compared to what they get in Europe and in the US. If you want to look at the trend of 1 year securities, the 1 year treasury bills, it's continued to drop. It's currently at 13.1. That's as at last week's auction. We've had another auction today for treasury bills, and we expect the stop rate on that 1 year in particular to stop at 13 or sub 13 if possible. The 182 days was at 13% at the last auction. That's likely to drop to 12.95. What is happening is that most of the foreign portfolio investors that play here have our calendars, and that's why it's very important we issue our calendars up front. They have the calendars and they key into the securities, and then the yield has continued to go down. That is, prices going up and yields coming down. It was in the news also that in 2017, capital importation into Nigeria was $12 billion. If you compare that to 2016, it was $5 billion. So it more than doubled. We see that continuing to this year. At some point, we expect country risk, geopolitical risk of Nigeria and Ghanaian elections coming up next year to kick in. However, the other factor that they look at, which is FX stability, the central bank has done very well. Since April last year, the INE window opened April 24th last year, and it's been very liquid market where there's been huge supply to meet almost all demand. Even the central bank takes up position from that market. That is, the central bank buys from surplus units who can't sell their positions in the market. That is, in order to beat their net open position limits, they simply sell back to the central bank in that same market. So there's excess in that market. Okay. The market is liquid. Okay. That's what I'm saying, actually.
Now, Bankole, the U.S. Fed is expected to meet today, and many people expect that they will raise the rates. Does this affect in any way your outlook for the month and the next quarter for Nigeria's, fixed income space?
Okay, Fed rates are currently at 1.5. That's in the U.S., and even in the U.K. it's at 0.5. If there were to be an increase maybe from 1.5 to 1.75 or to even 2%, there's still a huge gap between what's happening in Nigeria and in Ghana. So the West African space is quite attractive when it comes to yield on security. The challenge we have ever had is FX stability and geopolitical risk. That is, when elections come, there's this uncertainty around the economy and the news that comes out of here. But let's not forget that aside from the fact that we don't expect huge jumps in these rates that could be announced possibly in the Fed, the presidency in Nigeria and Ghana are into their first terms. There's a likelihood that they will be running again, and there seems to be some stability politically, and then even on the FX on both countries, it seems like they've gotten a hold on the volatility that caused the challenges we had in 2015. So I do not see a hike, even if it happens, causing a drop in demand as we speak.